Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys, I just wanted to jump in for a second and let you know a little bit. All right, guys, good morning. Welcome back to another live stream. Hope you're doing well. Hope you're staying safe in these crazy markets. And, I put out a post on Instagram today. If you don't follow me on Instagram, it's just at TraderNickFX. You can find me there. Trying to become a better YouTuber and a better influencer this year. I've talked about that a lot. Just trying to improve my content, make it a little bit better. It's something I do, as initially was a hobby. I started creating content for fun. Obviously now it's become a business for me too. But trying to get better at it, trying to be more, provide the type of content that people are really looking for in the trading space that actually, benefits people. I'm not a big fan of like the whole Lambo lifestyle, fake guru, get rich quick kind of stuff. But I do love like practical trading tips for your day and, trying to just be transparent within the trading space, trying to make more content like that. Anyways, as we get started, if you could do me a big favor, hit the thumbs up button on the stream. Appreciate you all being here. And let's jump into some charts. So we have NASDAQ down 1%, S&P 500 down 0.8%, the Dow Jones down 0.7%, Russell's down 0.9%, the DAX down 0.5%. Did you guys see the DAX? The DAX is almost at all-time highs, very close to its all-time record high. You can see we just narrowly missed it. And it is very possible that, if stocks reverse course here a little bit today, you may actually get a breakout to all-time highs on the German DAX. Kind of a crazy year so far. Again, when global markets were selling off and there was just a rage around the room about how, the new administration is going to ruin everything and we're all going to go, die and we'll never have prosperity again. That's nothing new. And again, I don't say that as in like obviously Trump's going to save the day mannerism either. Like, he brings a lot of volatility and uncertainty. But the bigger picture is this. Many people, they trade with their political bias, like way heavy. People did it under Biden. People are going to do it under Trump. They do it day in, day out. They say, oh, XYZ candidate is going to make the world a great place, or other candidate is going to ruin the whole world. When the reality is, again, while the president does matter, at the end of the day, there are other big, in fact, much larger trends that I think we should focus our attention on. What is this AI revolution stuff? Is that going to keep going, right? Is the story still there? I would say it is, right? You still have the AI theme. A lot of big companies, Meta, Amazon, Microsoft, Google, these companies that purchase tremendous amounts of semiconductors from companies like NVIDIA, they have, in their recent earnings reports, pretty flawlessly reaffirmed that they intend to spend significant amounts of money on developing out their AI infrastructure. That's been a theme for the last few years that has buoyed markets higher. It makes good sense, right? We all kind of, I don't know if anybody is not yet using AI in this chat. Well, actually you are. You may not even realize it. You may have found this stream today because of AI. AI is all around us. It's very powerful stuff, and it is changing the landscape of our world. So to me, it's like, okay, if you want to get super bearish because Trump's in office and that scares you. Again, there's bigger stuff than Donald Trump. Yes, he can move markets and he can spook the markets and his policies can change things. Don't get me wrong. I'm not saying they can't, but there are bigger themes than this, right? The economy is huge. The global economy situation, trends happening are way beyond any one person, even the most powerful person on the planet, right? So when it comes to, when we take a look at the NASDAQ, right? Why am I bullish on the NASDAQ? Well, a couple reasons. Number one, I think everybody freaked out way more than they needed to. And I was saying that at this time. So I know it's easy to say that now, but I was saying it at this time. And, you know, I was early. I thought it was going to be a turnaround story back here. So I'm not saying I'm perfect either. But I've been saying I think the market is overreacting, and it did. Now, could it still have a freak out? Could we see some lower prices? Sure. But I still remain thinking that I think trade deals are going to happen. I don't think it's the end of the world. I think that, you know, trade negotiations needed to happen for a long time. The way they were done may have been a little bit aggressive, but you can kind of sympathize with the idea, the quote unquote art of the deal, the Donald Trump playbook, if you will. You got to ask for a lot in order to get what you want, right? And so I think somewhere in the middle, we're going to see deals happen. That the market is now thinking that we are going to see deals. That's why it's come back up. And you know where we are on the NASDAQ, guys. If you take it, well, let's take a look at the S&P 500. The S&P 500 from its all-time high is now only down 9%. At one point, we were down 21.5%. So we've had a phenomenal rally from these lows, up 16%. So in my book, AI spend is still very much there. Company earnings were pretty strong, especially in the big companies that really matter to the US. Google, Microsoft, right? Look at Microsoft had a phenomenal earnings report. These are really important players at the table, and they came in swinging strong, much stronger than people thought they would. And so for me, it's like, okay, NASDAQ has put in some lows. We've broken through key levels of resistance. The trend here has flipped from just a clear downtrend to what I would say is now looking like an uptrend. So when I look at the indices, I am very interested if we can get a couple days down here, pull back into this 19,200 level. I am interested in long continuation plays on the NASDAQ, right? So we'll see where this goes next. We may get a couple days down here, but that would be what I personally need in order to get into the trade. I do like the NASDAQ. Let me just pull up my EdgeFinder here. By the way, if you are a EdgeFinder user, yesterday it was down. We'll see if it still has some issues today. We've been having, it's not EdgeFinder per se. It's actually Google's Looker Studio. The system that it's been programmed within has been having some issues. So we'll hope for the best here today. Maybe it will be working a little bit better today. I think it was working earlier. So let's see if it, how we look today. Looks like we're back in order, which is great. So NASDAQ, Russell, and Dow and S&P are all getting very bullish readings. To me, this is just the icing on the cake. I'm looking for longs, right? This is my focus now. We've been waiting for this kind of turnaround signal. And so if we can get some pullbacks on this, I'm probably looking to establish long positions in things like the NASDAQ, the S&P, the Dow Jones, and the Russell. Now, I have a good list of stocks that I've been buying in recent times. I bought companies, pretty much all the Mag 7 companies, Amazon, NVIDIA, Google, Apple. I bought shares in a lot of these companies during the recent dip, but I am looking to add to my positions if we can get a pullback into this 19,200 level. For the S&P 500, that's going to be right around the 5,500 level. So looking for pullbacks there. For the Dow Jones, a minor retracement from here, not much further, the 40,800 level. I'm going to watch that one. And for the Russell, would be interested, but would need to see a little bit pullback under that, around that 1920 area. So I have several indices that are on the watch list. That's going to be top of mind for me here. I would love to see a couple days where we pull back from there in order to get me into the trades. So hopefully that clears that up. Also, just a real quick reminder. So I've been doing questions at the end of my stream segments. If you'd like to ask me a question for later on in the stream, take a moment to fill out this form. And we don't have that many in there. So if you ask a question today, it will get answered on the stream to the best of my ability. So make sure to drop a question. We will have that up and running. We'll take a look at some questions here later in the stream. Okay, so a couple chart requests: dollar, yen, euro, Swiss, gold. We could take a look at some of those. Euro Swiss, probably going to be kind of an uninteresting currency pair for me. Very choppy chart. Don't really see anything here on a daily chart perspective. 4-hour chart, still pretty choppy. Don't love this one, right? Moving averages are kind of all over the place. So I'd probably skip this one personally. Again, if you have a reason to take a trade on a particular chart based on your own rule set, by all means, do your thing. But I have a very specific, strategy that I talk about on this channel. And if anything, Euro Swiss is getting a neutral or -3 score. So it's pretty much a no trade for me. In fact, currently we have no bearish setups on the EdgeFinder. If we flip this around, this is pretty much everything we've got. Aussie yen, Aussie CAD. Dollar yen's actually getting a bullish reading, which we've got to look at that one. Kiwi yen also getting a bullish reading. The German DAX, the Chinese stock market, platinum, the FTSE, the S&P, NAS, Russell, and Dow. Let's take a look at gold here. So gold is also very much a neutral reading for me on the EdgeFinder. Of course, I'm missing out a little bit here and wish I was in this trade. This is a beautiful move that we've had in the last 2 days. Bulls are still very strong here, it seems like, and pushing higher so far, right? Key level support around that 3,200 level. So you can see that 50% retracement came into play, bounced right off that level. I don't have a trade on. I wish I did. Obviously, this thing's ripping here, but it is what it is. I don't have a reason to be long gold at this time. EdgeFinder reading on gold, if we just filter quickly for metals, you can see gold is getting a +1 reading, which just basically means we have mixed sentiment. PMIs yesterday and Monday were strong. That's a bearish catalyst for gold, right? That pushes back the probabilities of interest rate cuts. And so we see negative factors on gold prices as well. So for me, this is a no trade. There's no bearish reading here. There's no bullish reading. So for gold, from a technical perspective, it looks great. Looks like it's probably going to rush back to those all-time highs. Technicals look amazing. Fundamentally, I'm mixed. I just don't have enough reason to take a trade personally. If you have longs and you're doing well with them, congratulations. That's awesome. If you're short, it's a tough thing to short, in my opinion. We'll see how this area reacts if we do come into contact with that previous all-time high, if we put in some sort of double top, or if we're able to break through that. But for me personally, this would be a no trade. Like, there's nothing I can do here. I'm not going to short this. I'm not going to long this. And I don't, take trades when my system doesn't give me a reason to do so. So technically, it looks very bullish. Fundamentally, it looks mixed to bearish. So I'm no trade for me. Okay. So nice shirt. Thank you. I appreciate that. Yeah, no, it's an insane move. That's a really phenomenal move higher on gold. I wish I was in this trade. Like I said, anybody would want to be in a long at this, with that kind of move. That's a beautiful move. For me, the dollar index, I'm still playing the move here to a certain degree by my euro dollar long position. So I do have longs on the euro against the US dollar. Let's pull that up here for a second. So this is a trade that I'm currently in. It's been really sleepy, really boring trade so far. I bought around here. It's just gone sideways for a couple days. I'm looking for a push back up to these levels, and I would take a quick profit on that one. So for FX, yes, markets are slow and choppy this morning. Indices, commodities, we got action. This is, for me, it's one of my favorite things about being fundamentalist first, like looking at this stuff first, is that I don't have to, if currencies are not moving very well, or I don't have setups happening on currencies, I can just trade indices, or I can trade commodities, or whatever I'm getting a solid reading and good technicals on. That's what I trade, because again, I don't want to sit around and wait all day long for a chart to finally give me something to work with. Well, for me as a swing trader, that could mean all month long, right? I could wait for a whole month and not get a setup if I stared at euro dollar all day long or gold all day long. If I don't have a reading, I don't have a reading, and I just move on. Let's take a look at Bitcoin. Is Bitcoin a reading on the EdgeFinder? Nope, not a reading currently. So watching Bitcoin coming back down to this 94,000 level. Ethereum has also been kind of a dumpster fire here recently. Take a look at Ethereum on a weekly chart. Look at the difference. Bitcoin is teasing coming back to those all-time highs. Ethereum is like just destroyed. Like, this is just crazy how Ethereum at this time is 60% plus from its all-time highs. Bitcoin is 14%. So it just goes to show you that relative strength. Bitcoin, the OG crypto, is still on top, it seems like, relative to its peers. Back to the NASDAQ. Like I said, I would love to see just another 2 to 3% move lower on the NASDAQ would probably get me into a trade. So I'm watching that this week. What about Palantir? Yeah, Palantir had, it had good earnings. I think it just didn't beat by enough. It didn't beat expectations by what the market is expecting. This is a stock that is incredibly exciting. And when everybody's excited about something, remember that the expectations for it are very, very high, right? Same with NVIDIA or, Microsoft or Amazon. These companies everyone knows that they're superpower companies. So when everybody already knows that a company is incredibly good, incredibly strong, and growing fast, the expectations can get really, really extreme. So when we take a quick look at Palantir, which many of you guys know Palantir, if you don't, it's an AI company. They optimize data for companies. They build, basically the ultimate kind of system for companies to plug in all their data to and optimize AI with. It's a really cool product. What we can see here is that on the earnings report, they were expected to have 12.9 cents in earnings per share. They actually got 13 cents. And so that was a beat, but absolutely barely a beat. And so what markets are looking for right now with these types of companies, these very expensive stocks, Palantir is priced for perfection. This company has to grow like a monster. Otherwise, this company will crash. Everybody expects it to do really well. That's what's hard about these types of companies. So these companies are phenomenal. Everybody knows that. So they price them very expensive. Even though this company pretty much met expectations, it's not enough to get the market excited. So it dropped 10%. That's what happens when that's the thing you have to be careful with stocks that are exciting. When everybody is exciting, when everybody is excited about a particular stock or even the market itself, right? Same thing for bears, right? We talked about this loudly many times when this market was crashing, right? Everybody was scared of this market. One little piece of good news shot the stock market up 10% in a day. So you have to really be careful when you're looking at a market to know what sentiment it is. And I talk a lot about technical analysis and fundamental analysis on my content. I talk a lot about these two things. But let me tell you about sentiment analysis and why it is just as important as the other two. Sentiment analysis, each one of these three things plays a key integral part of my trading approach. Okay? Technical analysis is when do I want to buy something or sell something? Fundamental analysis is why should I buy or sell something? This is for direction. This is for timing. You cannot have, in my opinion, in my approach, what has led me to where I'm at currently with my trading, where I've reached that profitability after blood, sweat, and tears. Win is what everybody focuses on. Everybody focuses on technical analysis. Why? Nobody pays attention to fundamentals. Like, very few retail traders really pay attention to fundamental analysis, right? This tells me, why do I want to be long or why do I want to be short? A chart can look really great. That's not enough of a reason to be buying or selling something, right? You want to buy something that has value or sell something that is worthless or worth less than what it currently is. So these two things matter significantly, but so does sentiment analysis, right? What does sentiment analysis do? Sentiment analysis gives me the risk to reward. Okay? What do I mean by that? Well, when it comes to huge trades, like trades where you get, let's say you get, let's say you got long right here on the break of this downward trend line. Sentiment, what was it at that time? Horrible, terrible. People very pessimistic. That produces attractive risk to reward. Okay. So if you have these two things, this is great. If you're 2 out of 3, you're good. But don't forget about sentiment. Sentiment is so powerful, guys, because that gives you the risk to reward. Because look, if you have everybody bullish on a chart, one piece of bad news or even suboptimal news causes that market to crash. When everybody is so bearish on a market, one flicker of good news can cause that market to rip. So this is where risk to reward becomes very attractive, is when you learn not only technicals for timing, not only fundamentals for which direction you want to be, but sentiment to know where the risk to reward is very juicy. Does that make sense? If that breakdown, if the 3-tier system, I talk about this all the time, TAFASA, I talk about it all the time. If that makes sense, do me a favor, just type yes or put a 1 in the chat to let me know that that resonated, that you understand what I mean by that. Next, I'll show you, if you're a new stream viewer or if you just want a refresher, I'll show you guys how I check this sentiment, how I track this. Denard, by the way, thank you. I didn't recognize that your name has become a channel member. Thank you very much for becoming a channel member. And if you have any questions, please feel free to chat them in the chat. I do try and prioritize channel member questions in the stream just as a thank you for your support. And your support goes a long way in terms of funding our coffee bill at the office. That's what I always say. We do go through a lot of coffee, and we greatly appreciate it. So thank you very much for becoming a channel member. So let me show you some stuff, okay? You want to talk about sentiment? Let's get all stretched out for this, because sentiment is a fun topic. In fact, sentiment is one of my favorite things. We have a whole dedicated section of the EdgeFinder to sentiment alone. So if you have an EdgeFinder copy, these two are going to be your best friend if you're trying to improve your sentiment analysis. Okay? So let's show you what's inside. First of all, this one is easy. This is easy. Well, actually, let me take that back. COT data is not easy. Once you get it, it's very easy. Once you understand how to actually use COT data, it's very easy to understand. And it's a very, very powerful sentiment indicator. Okay? If you just tune into the stream, we're talking sentiment indicators and how to use them to spot great risk to reward setups in your trading. As we go through this kind of educational segment, I do want to just remind you guys that if you have a question for the stream, drop it in the link that we're about to drop here in the chat. We do have a form system. So if you do drop it in the chat, I appreciate your question, but I can't promise I can get to you. If you drop your question in the form that we're about to link, we'll get to you towards the end of this stream. I've been dedicating a few minutes each day to answering some of you guys' questions, and I really enjoy doing that segment. So we'll get to that in just a second. So drop your question in the chat. I'm sorry, in this link that's just been dropped in the chat if you'd like to get one answered. So we're talking sentiment indicators for a second. Here's the thing. COT data is tricky at first, but very powerful and relatively straightforward once you get it. So sentiment from the Commitment of Traders report shows us what the smart players at the table are buying and selling. Point blank, hedge funds, institutional traders, professionals. What are they buying? What are they selling? That's a powerful indicator. We all know that, right? That's like day one trader can kind of understand that. These are what the pros are buying. These are what the pros are selling. Show me that data, and I feel like I have a little bit better of a clue as to what, the smart players are doing. Is it a guarantee that you just follow them and make money? Nope. It's not that easy, but it's a great confluence factor to add to your analysis. Just like everything else that we talk about here, it's about building a full picture, adding insights to your trading to make more informed decisions. That's what we're trying to do here every day on these streams, right? So take a look at this. So if I take a look at gold, silver, JPY, US oil, these things are institutionals are very long, these things. In fact, this oil positioning is very curious to me, and it makes me want to buy contrarian long positions on oil because oil's been such a dumpster fire bear trend here recently. Anyways, what I do also want to show you with sentiment is the latest commitment of traders buys and sells. This is a weekly update to the COT data mapped out. So this shows us on a heat map what they bought the most of or what they sold the most of in the most recent filed report. Okay. So in the most recently filed report, there was significant accumulation of the Dow Jones, the Kiwi dollar, which you guys know we've been looking for longs on this channel, the Russell, the Euro, Platinum, the Nikkei. These are some things that institutions went shopping for. What did they sell? They sold the NASDAQ, they sold copper, they sold the Canadian dollar, they sold the S&P 500, they sold Bitcoin, and they sold a little bit of gold. Okay, so not a huge amount, because the way to read this is they changed long contracts, they decreased long exposure, but they also, in a less form, decreased short exposure. So they decreased exposure across the board, but they decreased more long exposure. So we'd call that slightly leaning bearish for the week, right? So we built these tools to make that easy to read. And if you don't have these tools and you'd like to take advantage, real quick, let me just plug this before I forget to do so. The EdgeFinder is 45% off right now. We're doing our 3-year anniversary sale. It's the biggest discount of the year. So if you're somebody who is like, okay, sentiment analysis, fundamental analysis, I don't have those things in my trading. Because look, everybody here, every single person here has access to easy ways to do technical analysis. The barrier to entry on technical analysis is absolutely zero. It might even be negative. Like everybody can pull up technical charts. There's free charting platforms all over the world. What's not so easy to get access to is tools that help you actually track the market moving stuff, which is the fundamental analysis, the economic data. That's the stuff really building trends. So our team here at A1, what we've done is we've specialized in building those tools as affordably as possible to the masses. These things are very expensive to build and maintain, but we've made them accessible. They are purchasable products on our website, a1trading.com. And right now, we are currently doing a 45% off discount, and that is the biggest price discount that we do all year long. So if you do not have a copy, I just dropped a link there. Send us a direct message using that link to speak directly to our support team to get information about the 45% off sale before it ends. That ends this week. So it is coming to a close. Do not miss your opportunity there. Okay, so next sentiment indicator. So I look at COT data all the time, right, to get an idea of what big players are doing. But then I also look at something called the put to call ratio. It is my favorite sentiment indicator of this entire list. The put to call ratio shows me what crowd sentiment in the options market is doing. So right now, the way to read this without, doing a huge deep dive on the put to call ratio, when this gets very high, that shows you that there's a huge disproportionate bias towards investors buying puts. What are puts, you may ask? Well, if you're new to trading, you don't necessarily even have to trade options for this to be relevant to you. Puts are bearish bets that you can buy in the market. Calls are bullish bets that you can make on the market. You can buy bullish bets, essentially. So when everybody's buying puts, that tells you sentiment is fearful. Everyone's fearful. And the old Buffett expression, right? Be greedy when everybody's fearful, fearful when everybody's greedy. We've all probably heard that at least once or 1,000 times. So right now we would call this thing more in a fearful environment. People are scared of this market still, despite we've had a rebound. People are still very fearful of this market. That makes me contrarian bullish, right? That is a bullish indicator. So these are things that I look at. Those are just a couple of the things that I look at to filter in how our top setups algorithm generates scores automatically. So it looks at the commitment of traders data for us. It looks at the put to call ratio for us. It looks at trend. It looks at seasonal trends. It looks at PMI data, retail sales, inflation like CPI, NFP reports. It's downloading all that information and algorithmically putting it together to build a score. So that's my system in a nutshell. Sentiment and fundamental analysis wise, and then technicals are very simple. I'm looking for support and resistance, market structure, and looking to trail stops. So that is an oversimplified version of what I'm looking for. So right now, going full circle, based on the top setups page, which has many of our sentiment indicators and fundamental indicators pointing towards bullishness for things like the S&P, the Dow Jones, the Russell, I am looking for opportunities to get long on these things this week. So if I can get a pullback in the S&P 500 to 5,500, that's probably an area where I would take a stab on the long side. I'm not going all in. I'm not risking inappropriate amounts of money. I'm risking a small portion of my account on an idea that I think there's more likeliness that we go higher than lower from that level. Does that make sense? So something to think about, right? You can get lost in analysis paralysis because here's the thing, right? We just went through those indicators and you could take your time to go find, articles or posts about this or Instagram or Twitter. You could scroll and find information about all the stuff that I just did, but it would take you, first of all, it'd take you a lot of time. Second of all, it would feel overwhelming in terms of manually interpreting that stuff. That's where we built the top setups page to filter these things and just generate a bullish or bearish general bias based on the data that's coming in. And that's what I look at. So I'm not every single day staring at every single piece of information to try and build a bias. I'm staring at the output of the EdgeFinder to give me a general bias. And then I'm looking at the charts and building a plan from there. Hopefully that makes sense, but that's the idea for me. Dow Jones is pulling to the 40,900 level. I'm going to watch this one for a possible long trade. Dow Jones is, I think it's the top score. It's got a plus 14. So this might be a trade for me today. If I take this trade, it's going to be a small size because this is hardly a retracement from this pop here, right? You had a really big run, just a minor pullback here. So if I do take that trade today, it will be on very small size, just as an attempt to test this level. So I'm going to watch this one, see how it comes. If it comes down into this area today, I may take a stab at looking to get long. I see Lee says the same thing. So we'll see. I might try for the Dow Jones here if we do get a pullback into that area today. I'm going to watch that one close. So we will see on that front. Let me see. What is our live stream schedule? By the way, if you're not, you can always pull up our live stream schedule. Head over to a1trading.com, click A1 live stream here, and you can see the schedule for the day. So we're going till 9:45. We've got Alan joining the call, which will be nice to hear what he's got going on, what he's looking at in markets today. By the way, just a heads up on the stream planning side, we are now starting the stream at 9 a.m. So it says 9:15. That should be 9. So we're starting at 9. I'll go till Alan gets on, and then we've got Chris at 10:15. So there is your. I've decided to start the stream a little bit earlier because I do love doing the question and answer segment as a part 2 to my stream segment, but I've been running out of time wanting to get through charts and do questions. So I started the stream, rolled it back a little earlier, start time. Silver pushing up here today. Copper, natural gas. Look at oil, guys. Oil's up 3.5%, which is fascinating. You actually had some news over the weekend. OPEC's having a little bit of an internal battle, if you will. Basically, what's going on with OPEC? Well, so what is OPEC, first of all? It's basically a cartel that controls the global supply of oil. Saudi Arabia, all these different countries are involved in it. And they, as a group, determine how much they want to put out into the market. Why would they want to do that? Well, they want to control the price of oil to some degree. If everybody who produces oil just massively pumps it, the price of oil will drop, and that will actually hurt their own marketplace. So they intentionally, collectively decide how much oil they want to pump into the global system. Well, there's been some drama here recently because several OPEC nations are not following that rule. So what do I mean by that? Well, let's say that we agree we're going to put out, X number of barrels per day. We're going to put out this number of barrels. And then some other country within OPEC breaks that rule and does way more. They increase the production and sell way more than the rest of the group. What does that do to the rest of the group? They get annoyed because they're like, well, you just lowered the price for us and broke our agreement, basically. So Saudi Arabia has actually taken the extreme and said, if you keep doing that, we're going to drastically increase the supply, because again, they're trying to keep their oil prices high. At $60, Saudi Arabia and all those countries are much less happy. They would much rather be selling oil up in the 75s, 70s, 80s level. They do not like oil prices down here. And if members of the group of OPEC are breaking the rules and selling, how do you respond to that if you're Saudi Arabia, which is obviously a massive producer? Well, hey, if you guys don't get back in line, we're going to tank the price and make it very painful for those breaking the rules, because they'll just massively flood the market. So oil prices have been trending lower on all this drama, and for good reason, right? You got to think like, oh, if OPEC is having internal strife, and this has been a theme for decades, right? They always are debating, fighting, infighting about oil prices and all this and that. The point, however, is that oil, I think, is starting to get a little oversold personally. Oil prices are down, and I think it is, you saw this big capitulation gap lower over the weekend, and now I do see price potentially is trying to rebound. We may be due for, at the very least, a couple weeks of upside in oil prices, because I think Saudi Arabia kind of taking that strong stance may actually get what they want done, where they, get the others in line, if you will, in terms of oil producers. It's my opinion. I think oil prices are a little overdone here to the downside. Oil's getting a neutral reading on the EdgeFinder, and the technicals look terrible, so that's not going to be a trade for me on a short-term basis. On a contrarian basis, do I still own ExxonMobil? Let me look. I don't remember if I got called away, so I sold calls against my ExxonMobil position. Let's take a look here. I do. So I have ExxonMobil shares, and you can see these are in the water, underwater. I'm down $578 on these ExxonMobil shares. I did sell calls against my position, which brought in some income, which is ideal in this situation because oil prices have been really hurt. Exxon has, you can see, moved with the price of oil for the most part. And I don't mind holding my shares from here. In fact, if it does tank lower from a longer term contrarian basis, I'm very interested in building a bigger position long ExxonMobil. So James says, I bought oil at $58. Nice, James. Yeah, I mean, for me, the way I'll probably play oil prices would be, I may actually short some puts on ExxonMobil if we get any sort of downside. Like this is so contrarian in terms of price action, but I may short like $95 puts on ExxonMobil, which again moves, I might short puts, which basically means a cash secured put is saying I will buy the shares if they come down to this level, and in return I get paid a premium for selling someone else insurance, right? When it comes to my options trading strategy, I am essentially a stock market insurance salesman, right? That's what I do, is I sell insurance to other stock traders. Maybe somebody else out there owns Exxon, but they want to protect their downside, so they want to buy a put, right? So if you could own 200 shares, you might buy a put, right? You might buy a put. Now, I'll sell you that put. So you want a put, you want protection if the market goes down, I'll sell that to you. I will cover your losses, essentially. That's what an options seller does. You promise to cover someone else's losses if the market tanks. But what does the options seller get? The same thing an insurance salesperson get. A premium, knowing that that's unlikely to actually happen. Does that make sense? I know not everybody here is an options trader, so I won't spend too much time on that. I know it does very poorly in my content. Some people really like that stuff. If you're very interested in options, I would encourage you to come join us inside of the VIP group. We do trade options often. So I am mostly an options seller. I very rarely will buy calls or buy puts, but I will absolutely sell sell for premium options on stocks that I like for the longer term. It's much more of a long-term focus. When it comes to FX and options, I'm much more long-term oriented. I am short-term to a degree. It depends who you're asking. I'm long-term for day traders, but short-term for like investors and things. When it comes to like NASDAQ, gold, my trades can be a week to a couple weeks, which is really, it is short-term, not to the day traders and scalpers, but to most, the investing community that is still kind of, put it this way, tax purposes wise, I'm still classified it as a day trader for most of the, most intensive purposes, right? I'm still very short-term in nature. I'm not, holding things for years on end. So just something to think about. Chris definitely is the options guy. If you want options, stick around for Chris. I mean, I love options. I've traded them for years. It just doesn't resonate quite as well with my particular audience. I just know that from my analytics, right? I study my analytics really closely. I've actually learned a ton about traders in general from my own analytics. I know what people like. I know what people don't like. Not to say I know everything, but I'm learning a lot about what particular things traders are interested in and what they are simply not interested in. And options for my community are not something people are very interested in, even though it's something I do all the time. Again, I'm a content creator too. So I make content that I know is likely to stick with people, resonate with people, keep them coming back. At the end of the day, I am a content creator. This is a business. I'm not going to sugarcoat it any other way. I want to make sure I'm putting content out that people like. And I mean, I do also trade these things aggressively, NASDAQ, gold, Dow Jones. So I just focus more a little bit on that side of my trading than I do on my option side because of simply, as a content creator, you're not supposed to dive too deep on things that perform poorly with your audience. It's YouTube 101. I keep hearing it from I've been learning a lot about YouTube in the last 6 months or so. I've done it for years, but I've really taken it seriously in the last, year, and just trying to improve all that side. Anyways, let's talk about dollar yen, because I mentioned dollar yen earlier. We hadn't gotten to it. And then I need to actually, you know what? We can't make it to dollar yen. I got to answer those questions before I run out of time here. So if you did ask a question, we're going to be taking a look at those questions. Also, James or Chandler, if one of you guys could do me a favor on the live stream questions, if you could just vet them for me. I'm a little cautious. I'd love to have one of you guys just keep an eye on them, simply because I don't want to pull something up that would be like really inappropriate on accident. So if you could just check that list, I'll start off camera, and maybe just going forward, that'd be a good strategy just to make sure we don't, do something. First question is from Fabio. Has been trading for 1 to 3 years. Their primary goal right now is to improve their trading psychology. Nick, I just created a massive Ninja Trader bot trading gold, NAS, and Dow. And finally, being consistent, profitable, and secure. Quick question. What are your perspectives around the world of macro and economics perspective for the next few years, given the uncertainty of our actual world? When it comes to macro fundamentals, all that stuff, I take it day by day. I watch the hard data. I don't try and predict the future. And I just trade what we're seeing now, right? So Taiwan and China could blow up, or Russia and Ukraine could keep going, or peace could come throughout all these different places, or something could happen in the Middle East. It unfortunately probably will. Like, those places are very volatile places. So I don't try and predict those things. I can't predict that. I'm not going to try and build a trading strategy around that. I build my plan based on what we see in the economies of the world, and I trade accordingly. So I'm actually looking at I'm reactive, not proactive or predictive, if you will. Walter says they've been trading for 1 to 3 years. Their goal is to better understand the EdgeFinder right now. I'd like to understand your take profit strategy in FX. I understand that you operate a lot in Forex using a dollar cost averaging strategy, but I'd like to understand a little bit more about the dollar cost average approach in euro dollar. If possible, I'd also like to know if you trail your stop loss in Forex. So primarily what I do in FX is different than what I do in indices and commodities because of the way they move, right? At the end of the day, when it comes to euro dollar, take a look at euro dollar, take a look at the weekly chart, scroll out. Where does this thing go? It goes nowhere. Over very long stretches of time, euro dollar doesn't guarantee that this is going to be the future, but for the most part, it goes way up, it goes way down, it goes back and forth, and it lands flat. So over the very long term, this market behaves differently than gold. Gold behaves overall in uptrends. It has periods of bear markets, which you can also take advantage of, but it behaves differently. So when it comes to FX, I do have a slightly different style. I have accumulation distribution type of approach to trading, things like the euro. So I have a long position here. I'd take some profits if it moved here. If it comes down, my position is so small that I wouldn't mind if it comes down. In fact, I would get a bigger position built here, and then maybe from there I would take profits if I can find a proper exit there. And if it kept going, I'd build a little bit more position, right? So I dollar cost average in FX because of the tendencies of how those markets tend to behave. Euro dollar does not trend in one direction forever usually. And if it does, my position sizing is so small that it doesn't kill me. Right. So it's a different approach. I do also use a dollar cost averaging approach on stocks and options. So it's not the only thing that I do, when it comes to like good companies. I'm accumulating, buying them using selling puts for premium. Cash secured puts can turn into assigned positions. So, the only thing I really trade with a tight stop and manage my risk doing that is, and these have bigger positions for me, would be like NASDAQ, gold, oil, these sorts of things, silver, copper. If I'm trading these things, I'm trading the momentum and the fundamentals in the short term to try and ride those trends. Hopefully that makes sense. Let me go next question here. James says they've been trading for 1 to 3 years. How could I learn Forex? Do you have any course? Yes, I have a playlist dedicated on my channel to specifically tips on trading Forex. Head over to Trader Nick on YouTube, go to my playlist section, and we have several there available for you on key topics. Specifically, if you want to learn Forex, I have a Forex strategy or Forex playlist. I have indices, commodities, etc. Next up is Sarab. Their goal is to become a funded trader. Hello, Nick. Good evening from India. How does the recent statements from the Swiss National Bank about not ruling out negative interest rates affect the Swiss franc? So definitely bearish, right? The Swiss franc has been, they also had less than expected inflation data, which has been weak for the Swiss franc currency pairs. You can see things like NZD CHF recently, New Zealand dollar gaining some strength against it. Next question. Ranash has been trading for 3+ years. The primary goal right now is to improve trading psychology. I'm about to buy your VIP signals with the funded account connected manually. Do you think it is a good idea? Well, okay, so I get that question often. Can I just copy your signals and pass funding programs? So I don't encourage anybody when it comes to our VIP trade alerts. It's not a copy and paste make money service. We absolutely do not advertise it that way. It is a service where what you can do within the group is you can see trades being taken by myself and my team with full context breakdowns and explanations. It is primarily an educational service where you can see trades that we're taking and why we're taking them. It is not a good idea, in my opinion, to try and copy your way to passing prop firm accounts, because you never know. Like, I could hit a losing streak today. It's going to happen sometimes. I can't tell you predictably how good I'm going to do in the next 1 month. My returns this year are all over the place. They are overall positive this year, but I've had, really ugly drawdowns in between. Or not really ugly, but I've had some drawdowns in between. So I don't encourage that, because again, you're going to be probably disappointed if you're looking for me to always be right. I'm just not always right, but I'll share every trade I take, importantly, the context, etc. Cedric, next up, will you ever try to pass a prop for challenge on the side and making content out of it? Probably not. I just don't find that. I know I've had that request before. I just don't really care to do that content. I know that some people really want me to do that content, but there's great content creators doing that. So I'm just going to let them do that and continue to do what I do, which is, what I know, what I love, what I really want to build my content around. Streetum says, hey, Nick, my older brother has purchased the EdgeFinder. He suggests me to use it, and I've used it for the last 2 months, and it's really improving my fundamentals and also giving me confidence to stay in a trade for a long run. Thank you, man, for making this tool for retail traders. And I have also passed 2 different 50K funding challenges. Wow, congratulations. Not really a question, but I really appreciate the positive words. Shout out to you and your brother for making those big progress points in your trading. Shout out to you. Funded on 2 different 50K challenges. That's awesome. Good stuff. Daniel, is your signal group worth it for Forex if I don't dollar cost averaging? So I don't really do, when it comes to FX, I do dollar cost averaging, but not all of us do, right? Chris Pulver does something kind of similar. But if you're looking for like tight stop loss intraday Forex trading, probably not the group for you. You can see some examples of trades that we've taken by browsing our website. Go to a1trading.com. You can see some more information about that. I can't seem to find Bitcoin on the EdgeFinder. Okay, well, I'll definitely take a look at that. I'm going to try and speed through these last questions because we've got Alan joining the call and I don't want to keep him waiting any longer. So let me just do one or two questions. Um, have you or people you know been scammed by fake gurus, sketchy brokers, MLMs, etc.? Yes. I mean, well, not me personally, but yes, there are scammy brokers out there. Make sure something that you're looking to get involved in is regulated, and in my opinion, avoid like the plague any MLMs. Those things are almost always scams. People faking, the lifestyle to get you to sign up, and then they really just encourage you to be just avoid that stuff. It's straight up a scam. I've never seen somebody except for the very top of people make any kind of money doing it, and you're better off just learning to trade. And if you really want to get into the business side, you could try to become a content creator. You could become affiliate for some of these programs. There's other things you can do, but MLMs are just straight up, in my opinion, just straight up scams. It's my opinion, allegedly, etc. Stay far away. Last question. I'm sorry if I missed your question. We've got our next show starting, so I don't want to keep them waiting. Hey, Nick, my question is related to the ORB strat. I don't know anything about that one. I've seen people talk about it. I'm not going to answer that question just because I can't give you any information about that. Definitely would encourage you to look more into that based on someone who's done some proper videos. I'm going to skip that one. I've been following for the majority of my trading career and have now reached a stage of profitability with huge thanks to the EdgeFinder helping me diversify with the top setups page. What made you want to start a YouTube channel, document your trades, and educate others at the same time? Armin, thank you very much for your question, and glad to see that the EdgeFinder has been beneficial to you. The reason I started my YouTube channel a long time ago is because I love making content about this stuff, and it turned into a business for me. Obviously, the EdgeFinder is a product that we sell. My YouTube channel is a business. I will never say it is not that. I use it to educate traders with my experience for free, and I also use it to leverage and share my products with the world. So it's something that I think is mutually beneficial to everyone. I use it as a business source, but I also genuinely hope that it is helping and benefiting traders who are looking to improve and want to learn for free. My channel is ultimately free. Even if we advertise on it, it is a free place for you to learn stuff. And I genuinely do my best to stay as transparent as possible. Up next, we've got Alan. Sorry, keep him waiting. I sped through as many questions as I can with just a few minutes. Right after this quick break, Alan Perez taking over. Stay tuned.
Attention A1 Trading Show fans. If you're interested in getting free access to the EdgeFinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
Hello everybody, guys and girls. How you guys doing? So for this session here, I really haven't placed any new trades since last week. So it's pretty much been same old for me. So I guess I would just update those positions, see how I'm going to manage them because we do have Fed meeting coming up tomorrow and the interest rate. Someone asked in the chat, do you think the Fed is going to cut tomorrow? I don't think so, in my opinion. If we look at the CME Fed watch tool for tomorrow, there's a 98% chance that the Fed's going to, stick where they're at right now. But that's just my take. Now, when you go to June, it kind of shifts a little bit, 65% that nothing's going to happen in June, 33% chance that there will be a cut. And then, so this is a good tool, CME Fed watch tool, good tool to see where the market's at probability-wise for rate cuts. But what I want to do is just share my positions. And then also, because I really haven't done anything, share how I'm going to manage those coming up to the Fed meeting. And then I'll just leave the rest of the time to answer questions. I know you guys had a lot of good questions in the chat. And I want to make sure that, everyone gets their question answered and, keep the engagement going. Lambo Allen is on. Absolutely not. I don't know where that came from. I don't have a Lambo or anything like that. But it's funny, I guess. So where are we at right now with the dollar? Dollar index here, like I said last week, we've just been hanging around in this level, kind of just waiting to see. There's to me, it seems like indecision, right? We kind of broke past the 100, but didn't get any confirmation or follow through with that one. And then, 99 breaking below 99 and flushing down lower. We also didn't get that either. And I did anticipate like this range bound motion up until the Fed meeting, until we get more clarity as to like where the tone is going to be for the Fed. Are they going to be more confident that Fed, cuts are on the horizon, or are they going to be more of the usual, data dependent wait and see approach? So for most of my positions, I'm pretty much still in them. Like dollar yen, I bought in right here at this green level. It's pulling back, giving back some of that. I don't mind holding it through. Most of my trades really are at really good levels. Like I bought dollar Swiss here at the 8100 or 81400 level. So they're still all in profit, which is why I'm like comfortable holding through. And they really haven't broken any structure. Like I see like dollar Swiss is losing this strength, right? It had some higher highs, higher lows, but now it's starting to fade off. And you can kind of see that in the dollar index itself. So that's what I'm basically looking for, seeing if I want to hold through or not, and just being mindful of the tone that's going to be said tomorrow. Helicopter ball out is in the chat too. Now, one thing that gives me confidence to go ahead and continue with this long dollar in the short term is that on the EdgeFinder, if we look at the eco and the top setups too, we do see that dollar yen, dollar Canadian, dollar Swiss is now seeing a little bit of bullishness, +3 score, not the best score, but considering that these were very bearish before, kind of tells me that, since I'm at a good price, I have the room to let it breathe and move. And because I'm going against the longer term picture, I don't mind letting it, go ahead and run. And if it hits break even, then it hits break even. But if I do see an obvious trigger that dollar is going to go ahead and depreciate, like if we get a certain statement coming out, like China is not cooperating, we're kind of back in that seat, then I'll just manually close those trades for whatever profit that I'll take. What's your reasoning behind buying dollar yen? Yeah, so in my opinion, I trade FX primarily, right? In my opinion, this year has been very catalyst news event driven. Sometimes you will see that certain figures that are being released gets ignored. Like I remember early in the year, we got a high CPI print in the US and the dollar sold off. Usually a higher CPI means a higher dollar. So I've been noticing those things, and I've been noticing that the bigger reactions are to news catalysts. So my biggest emphasis is being on keeping up with the news and finding out what's really driving price to move. And what I found is that a lot of it, and I sound like a broken record because I do weekly outlooks on my own channel, and I always say like Trump tariffs, Trump tariffs, Trump tariffs. And that's the thing that's really pushing the market, right? So the negotiations, right? Seeing negotiations happening cause dollar yen, dollar Swiss to go ahead and appreciate, because the yen and the Swiss are safe haven assets. So whenever this uncertainty was going into the market, yen and Swiss and gold saw a lot of inflows. So what I was basically doing is when I saw that India was cooperating, and when I saw that the EU was getting some slack as far as automobiles, and that there were certain exemptions to certain industries or certain sectors in the market, I saw that on the horizon we could get more news catalysts that are pro tariff deals. And so I went ahead and took that contrary position. Now I also use that with a mix of technical analysis. So when I saw that we were at this level here on the daily or even the weekly of support, we saw it hold 1 time, 2 times, 3 times, and then ultimately 4. I kind of blended those two, conclusions that I came up with and said, okay, this is a attractive way to go ahead and buy and take a stab at it. So that was my basis for dollar yen. Basically, if uncertainty comes down, those safe havens are going to be in less demand, and more dollar demand will go ahead and come through with that. Isn't FX way harder to trade though? It poses a lot of more, to each their own. To be quite honest, I've always just traded FX. Like back in 2017, 2018, that was just what I was introduced to by my dad, and I stuck around with it. So I guess I've formed a betterment understanding. Like if you were to tell me to start trading options, I'd probably lose a lot of money because it's just not my forte. It's not what I'm used to. But to your point, yes, FX is a very range bound motion, and but that could be a good thing. If for example, the euro is one of those things that I've been playing. Is like last year I was just shorting the euro. Because like you said, it's just been in this range bound motion. So whenever we hit levels like this, you can know with a good probability, if the fundamentals are aligned and sentiment aligned, that this is a good way, probability wise, to go ahead and short and make money on these moves. Same thing to the upside, 1, 2, 3, times where price really respected this level here, the 104 handle, give or take. You can take advantage of those moves, right? So being range bound, especially when the range is like, I don't know, 750 pips, is not necessarily a bad thing. And a lot of people, when it comes to FX, their approach is dollar cost averaging, because you can really catch these moves if you're pretty conservative, like take small positions and wait for the move to ultimately happen. When it does happen, that's when you catch these 700,000 pip moves. But I would say scalping is way harder than my swing trading approach for Forex. And that's just my opinion. When it comes to scalping, you're at a really big disadvantage if you're kind of just comparing what other people have as far as tools wise. Like I was talking to, like, when it comes to traditional prop firms, like the ones where you go in and work there, get a salary and stuff like that. Where I live in Chicago, like right over there, there's a bunch of them. And their edge is proximity, being close to the Chicago Mercantile Exchange, right? So they pay millions and millions of dollars to be, a little bit closer to the exchange to get milliseconds faster in execution speed and all this other stuff. So when you're looking at it like that, right, if you're scalping, that's who you're going up against, right? People that are willing to pay X amount for that and X amount for algorithms that have 5-figure overhead cost a month and things like that. So in my opinion, my biggest advantage as a retail trader that doesn't have those resources is swing trading markets like this. Swing trading the indices is a really good option. Swing trading anything, I think, is what fits my lifestyle the best and what I have access to. Trade FX futures. Yeah, FX futures I like as well. I don't trade futures, but the fact that it's a decentralized or centralized exchange, you have access to order flow in real time. I like that as well. And that's what the CFTC, the COT reports is based off of the futures. Support and resistance are traps, only liquidity. It depends. Here, I like that because it's going to open the conversation that I like to, if the chat can get engaged. If we just look at this level, right, we're going to be hypothetical. September 30th, 2024, around. If you're looking at this level and you're saying, okay, in the past, price has respected it. If this is you, and I see this a lot with like the retail crowd, and I'm guilty of doing this when I first started as well. So I see this a lot. Super tight stops, trying to catch this insane move, right? If that's the case, you're going to get chopped around here until this move finally happens. And sometimes you can get chopped up until you have no more ammo to go, and then this move finally happens. So you can very much get caught into liquidity, if you want to call it that, when you're playing it like this. What I would say, if you're trying to catch this bigger move, then your risk or your stop loss needs to be appropriate as well. So maybe giving yourself a 200 pip stop loss or 150 pip stop loss. Now, a lot of people don't like that because when you increase your stop loss or widen it, that means your size has to come down. But I would rather much reduce my sizing to give myself an opportunity to really know if I'm right or wrong than to just, gamble for, say, super tight stop loss trying to catch 600 pips, and then you're just going to get chopped up. Now, what you can also do is, let's say we go with a wide stop loss, you give it room to breathe, and you start seeing that price is indeed coming in your favor, right? We rejected this zone, we solidified that, and we're getting some push to the downside. Then you can go ahead and start adding responsibly in areas where it makes sense. And then you can maximize your profit that way. But at least you gave it a chance to solidify if this longer term move is going to work out. And that's pretty much what I do is I take stabs at a market if I'm going with the trend, give it breathing room to work out. And if it works out and the fundamentals are in line and sentiment in line, then I will add to my position responsibly where it makes sense. I wonder where the regulars are. I know Lee's here, Ball Out's here. Bashy's not here today. Now, though I'm long dollar in the short term, I am going to start looking actively to where I can go ahead and flip positions because I do think that rate cuts are on the horizon. I think we're a little bit late to the party. Every other country or every other big central bank has started to cut rates. And I think we're due for that. So I want to start looking for opportunities. If tomorrow's the opportunity where we get a very dovish Fed, then I could realize my gains and then start looking for opportunities to go long on like something like the euro. Short dollar yen is a good one. Pound dollar was really strong last night. I don't know why. I believe I missed something. I'm sure I missed something here. But let's see, pound dollar, pretty much just ranging, right? Could be before the Fed tomorrow. But I do like pound dollar to the upside. It's been really strong here. And pound tends to be very strong relative to the euro. So we get I really wanted the 3,200 level for the pound dollar. If we can get to the 1,300 level, I would go ahead and probably buy that. GTA 6 trailer is out. That's good to know. I don't have a PlayStation or Xbox or anything like that, but I know that GTA 6 is highly anticipated. Max, you have a delay in live? No problem. Lee, that's a good question. Do you look for specific candles? Not really, actually. I did before, but not anymore. What I really emphasize more is just getting an attractive level. Like if I know on this chart, relative to the trend, relative to the sentiment, relative to the fundamentals, that for the most part, pound dollar is going to go ahead and appreciate, right? I'm not really looking for candles. I just want to get a really discounted level relative to where we could go and to where we're at right now. So not necessarily looking for candles. I want to buy at a level, right? And if I'm hesitating on a level, like let's say dollar Swiss is a good example because I went ahead and bought dollar Swiss, right? This bottom of this range, super undervalued, right? Relative to like the range that we were in. And I wanted to go ahead and go long, contrary position here. Flush, I wanted to get in this level. So just being here was enough for me to go ahead and buy. But I also wanted to see like some continuation. And then we saw this continuation. So like once we were already here, I bought. And we were still in the parameters of being at a discounted level, in my opinion. So that's what I went for. Not necessarily a specific candle, although that can work on like things like the daily or the weekly. Like if you look at the euro, you saw this candle on the euro on the daily was it the weekly? I believe that was a better print. Yeah, like this candle in the euro, this would have been enough. You know, this one right here. This would have been enough to go ahead and go short if I was looking for a specific candle. But yeah, I just want to see if I'm going long, I want to make sure I'm at a discounted level that I like. And if I'm going short, a very premium level. Any music from Tool on that GTA 6 trailer? Kiwi dollar, I actually like Kiwi dollar to the long side. I think it's still a good reading on the EdgeFinder, I believe. Yeah, it's a +2. It faded a little bit, but given that all these went ahead and popped up and this one stayed pretty much there, I do like Kiwi dollar. I wonder what it's doing on the regular. I've recently I really liked the eco top setters page a lot more. I'm actually really happy they came up with that. It's a +3, but let's see. I think COT also, they got some inflows. Yeah, New Zealand dollar got a bunch of inflow, 5% net change. They took off a lot of short pressure and then they went ahead and added long pressure to that. I do like Kiwi dollar for sure. If I were to buy one, it'd be, if I'm going short dollar, I'd probably buy the euro or the Kiwi. Just because in the back of my head, I'm still thinking of that stimulus, 500 billion euros or 700 billion euros to defense spending in Europe. That really sent the euro skyrocketing. Off main, yeah, I think the daily and the weekly candles can tell a story for sure. I think those are a really good picture as to like where things can go. I think the lower you go in time frame, the more prone you are to noise. Dollar Canadian, don't like it, man. This is one of my losers right here, dollar Canadian. I bought like at the bottom of this range. Oil was at the time coming down, and the correlations were not working out with me. Now we're still like in this upward channel here, but not a fan. I don't like that it's not working out with the correlations. Excuse me. And I know that longer term, I want to see dollar go ahead and go down. So not a good fan. I think, though, that dollar Canadian could go ahead and break this channel here and continue lower for sure. Definitely think that's a possibility. In fact, I'd probably do that. If I get stopped out, which it looks like I might, and we start breaking this level, then I'll probably short dollar Canadian. Anyone bought Hog Tool coin? I heard about that. If you could tell me what happened, that'd be cool. I think it was a rug pull situation. HBD, yeah, rate cuts, no tariff discussion. The only thing that concerned me was I saw on Financial Juice, I think it was Monday or Sunday night, that Trump went ahead and said, like, we're not meeting with China, like that communication has pretty much halted. So that could send dollar lower. And then if we do get the rate cuts, that could definitely send dollar lower for sure. For me, support and resistance never worked. Now mark liquidity on the chart when liquidity is sweep, and then look at the FVG BOS in small time frame, 15 minute. And H-ball out. So yeah, I guess that's the big thing, right? Some people were saying that they were communicating through various channels, and then China would say, or she would say, that they would never talk at all. But in my opinion, China can lie, so they're not always honest, in my opinion. I'm not saying like the people, but the the government and the way they approach certain things, they're very to themselves. Support and resistance doesn't work. I think it works. I think it works on higher time frames. Ball out, like dollar Canadian right here. This level, if you were to play the bounce on this one, you'd probably be profitable or make profit. If you were to sell this level, 1, 2, 3, 4, 5 times, you would have made something. No, I'm not saying that either, OT. You got me there. America is also sometimes not an open book. But Blake, I am a patriot. You're right. I think if you look at the long term, future looks bright. Ball out, sure. But I think on the higher time frame, especially in FX, where things are range bound, like if you look at Euro Pound is a really good example of this. It tends to respect levels on the higher time frames, in my opinion. Like, let's go ahead and clear, like you said, clear this chart. I mean, depending on the time frame you're looking at, of course. Like if you were to go down to like the 1 hour, and I think Chris comes on soon, right? So I need to be mindful of that. But if you look at the 1 hour or something like that, then sure, these levels do hold less weight. When you go down to the daily or the weekly, these levels can pretty much hold. Like, for example, where's my drawing tool? Come on. There it is. Like, this is a level I see that catches my eye right here. Resistance 1, 2, 3, 4, 5 times. And now it looks like it's acting as support. You see this wick holding up. That could hold, right, on the higher time frame basis. Order blocks work in the sense that a big player enters. In my opinion, a way you can really know that without using an order block is by looking at the real-time order flow. But guys, Chris is here. Thank you guys for having me. Have a blessed one. Bye-bye.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, everybody. How we doing? Happy Tuesday. Markets are down a little bit for the morning, mostly with a gap. Intraday price action pretty chill so far, just back and forth noise. Just zooming out, there are some levels that I want to keep an eye on. Let's go to the 15-minute time frame here. So lots of gaps, lots of back and forths. Gap fill from today would be up around 56.50. We have a gap fill from last week around 55.50. We have previous structure right here, support, resistance right around 5,500. I would imagine price is going to be relatively quiet, most likely not directional today, in lieu of the Fed tomorrow afternoon. A lot of times I do see these last 3, 4, 5, 6 months of Fed days, like Monday, Tuesday, Wednesday, pretty calm, everything kind of around the Fed. So anyway, looking at some intraday price action, not a ton is going on. I'm looking at a trade this morning around 5,700 would kind of be my upside limit. I don't think we're going too much higher than 57, and 5,500 being my downside. Problem today is the VIX has been beat down enough that I'm not getting a ton of premium if I'm selling. I actually passed on the trade this morning, so it actually would have worked out because we did have just some centering price, which is fine. But I'm waiting to see if I can get something. A couple things. Either one is, how does price behave if we come back up into this gap? Do we fill the gap with some room to the upside? Do we fill the gap and have like a range day? I'll keep an eye on it. I'm noticing, some of these flows back up to 57 are filling up. I don't think we necessarily get there today, but that level could be in play for this week. So if you're looking at some key levels for this week with the Fed tomorrow afternoon, and then the Fed usually is kind of the market's excuse to like break out, give some directional pushes on Thursday, Friday. 5,700 on the upside, 5,500 on the downside would be two levels I'm watching this week. Okay, I'm going to get some updates going for. I put in a trade yesterday. You could do something similar. If you'd like to do that today, I'll put it in Pulver alerts right now. So this is, I'm still rocking a 257.50 call with some ownership. HIMS, my ratio spread is up about 75% profit right now. And the nice thing is if HIMS continues to go higher, then this is just going to increase in profit. So if this is accurate, where I can get 95% of this profit now and not have to wait 255 days, obviously I'm going to take a majority of the profit now. Let me see if I can close this down. If there's enough liquidity, I think HIMS had earnings last night, or is it today? It can't be today. There's no way. Yeah, they had earnings. Okay, so big push to the upside. We were all the way up to $48. Ooh, that would have been nice to have that diagonal spread still running, but whatever. Anyway, earnings were solid. Let me see if I can get out of this thing for like 90+% of profit. Right now, showing about 94% max profit. If I can close this thing down, I'm going to get out. $1.30 max credit, trading for $1.22. Can I close this down for a 5-cent debit? Survey says 6-cent debit. If I can keep this under 10 cents, I'm going to take the profit. 6 cents, 7 cents. 8. All right, 10 is going to be my final offer. If not, I'll just sit on it. 9, 10. All right, final offer. Not taking it. All right, I guess I'll just wait. No big deal. Okay, let me get into stock option trades. Tesla. Here's the position. So Tesla, here's what I did yesterday on Tesla. So I bought some shares, and that share fill was 279.61. So I'm down about $4 on the shares. Okay. But I've got a covered call at 280. So if price does get back to 280, okay, so be it. I collected $8.10 on the covered call. So I'm going to show you the math that I did. I'm going to type this in. This is a new trade. This is new trade. Tesla. Buy 100 shares at, and if you're doing this trade now, you can obviously get a better fill than I did. But I bought the shares at 279.61, added a 5.9 expiration, sell 280, call for 810 credit. And then I added, for a put protection, I added a, let's see here, I added a 718 expiration, buy 125 put. And that was only $1.01 debit. So net position is 279.61 minus 8.10. And then since I bought plus 2.02, so my break even on that trade is 279.61 minus 8.10 plus 2.02. My break even is 273. 273.53. I will continue to sell calls against this position to generate income. So let's say this week that Tesla is greater than 280. Well, I'm going to sell another call at 280, or I might sell a call at 280, 250, or 285. But more than likely, my goal is just to take the break even right now, which is 273.53, and lower the cost, lower the cost, lower the cost. Ideally, as I try to lower the cost to, generate $1,000 of income, $1,500 of income, $2,000, whatever. I don't know how long I'm going to hang on to the trade. I'm pretty bullish through like end of June, meaning if we can just kind of survive this area, I think that, July is like the one kind of uncertainty period that I have, because I don't know if this tariff window is going to be more chaos for the markets, or we have more clarity for the markets, right? Like it's kind of a big 50-50. I'm hoping that it's more clarity for the markets, and the dust settles and everything's like, yep, we did some trade negotiations. This is what things look like, as opposed to, hey, we still don't know what this trade deal is going to look like. We still don't know if we're going to have all these trade partners, if we have more, frenemies now. But July is that big uncertainty, and the Fed starts to cut rates, and we'll see if there's, good data, bad data. Earnings is okay. Earnings comes in like consensus wise, earnings are coming in okay. And yeah, I mean, to me, it's an income trade at first, not necessarily a long-term play, but I think a lot of traders out there would consider Tesla a long-term hold, especially after being down 55%. So the more income I could generate, the premiums are pretty solid on it. So so stay tuned for more updates on this position. The goal is to lower overall cost and eventually let the shares get called away for a nice income trade. All right, so that is the trade on Tesla. And the reality is, if it goes up, if Tesla goes up, I may not, if I have a covered call, I'm just going to keep rolling that for income, but I'm not going to try to stay ahead of it. I'm going to try to keep these covered calls within like 1 week, because the premiums are pretty solid. Okay, so I put that trade in yesterday. If you wanted to do something similar to that, you are getting a better fill. You're saving about $5 off the share price. But like I said, I have a put that's not showing profit yet, but I went out farther on the put. And the reason why is if price does end up dropping back down on Tesla towards, let's go Tesla here. If price ends up coming back down towards, let's say 220 or 215, well, then the 125 put is going to be gaining in value. So if I can turn, $1, and I have 2 contracts on the put side, by the way. So I have 100 shares that are covered, and I did a 2 contract hedge that was cheaper. So I'm willing to sacrifice that $200 on the trade. But net, I'm trying to make at least $1,000 on this trade. Hopefully more. Okay. All right, so I added that trade to Tesla. Snap, I put in a trade yesterday. I bought shares at 856, added a collar trade where they get called away at $10, or they're protected with a long put at 7. The expiration is out 45 days, pretty textbook as far as like the timeline for like calls and puts for me, about 45, 50 to 60 days. And, right now it's like net down $20. I'm looking to see if Snapchat can still get into like the teens. I think that there's a good price target on Snapchat around $13 to $15, which is way up here. So if we zoom out, I mean, there's been a pretty nice range. Intermediate highs around 13.29, and then obviously the 15.16 highs that we saw back in June of last year and December of 2023. They did have positive earnings. The guidance wasn't super awesome. I think that's why the market dipped initially on earnings. But I do want to have downside protection during I don't know what it was so bad about 2018 for Snapchat. I would hope that 7 years later, this company's evolved enough that we can, kind of get off these lows. But I'm prepared that if it has to come down here to like $6 or $5, that I'm going to continue to have some protection. So this is another one that's like, it's not super expensive. I did 1,000 shares for every dollar gain. That's pretty decent. So if I can get, $9 to $10, $10 to $11, there's some good income there. Okay. All right. We'll do a little top down here. SPX still pretty quiet on the day. Futures market pulling back. So we've got S&P futures up above the session VWAP for the day. Maybe making its way into this kind of measured. I think this is like the single multiplier. Maybe this is a double. Let me check. This is a 1 multiplier. All right. So kind of like the intraday range, like above session VWAP, multiplier 1, kind of like a 1 standard deviation move above or below the VWAP. So if we get up to like, and I just called this out this morning, 5650 is likely going to be a rejection spot. Intraday, that would be the gap fill. So if we come to this level, I could see price, getting there and then rejecting and then still having a bit of a range trade. Let me see if there's anything that stands out in the SPY. Yeah, I mean, SPY levels this morning, kind of mixed. Starting to see this like 555 handle light up a little bit, but these are low volume levels. I'm not seeing like any major magnets here. It looks defended, but no major like magnetic outliers on these liquidity levels. So there's kind of open space in between, but we might just kind of hang out in these defense levels for the day. Tomorrow's a new day with the Fed, but just not forcing trades right now. I was looking at some income opportunities yesterday. Did some earnings trades this week. Earnings trades, added a trade in on BILL, added a trade in on UPST, that's Upstart, and then added a trade on App. Take a look at those really quickly. I don't think they had earnings yet. Not yet. So Bill, not yet for earnings. Upstart, not yet for earnings. And App, not yet for earnings. I'm watching a trade on Amazon. We're still hopefully pushing down towards this blue level. And then Apple, I took profit on yesterday. We're, staying below the 200 threshold, which was good. And then I have Hood running as well. We're still right in the freaking middle. Gosh darn it. So on some of these earnings plays, I need to see if price can get above or below or 2. I need to see if it gets at least to the expected move for some of the trades. Okay, currency strength on the day. Here is yesterday. Japanese yen was strong. Today, Japanese yen is strong once again, along with the pound. The New Zealand dollar is coming back a little bit. Aussie's coming back a little bit. Swiss is weaker. That's a good sign. Let's take a look at some of those currencies. Aussie Swiss still climbing a little bit, seeing some profit and hopefully a lot more to go. CAD Swiss actively looking to carve out some lows here. Daily time frame oversold with divergence. Euro Swiss, this support level to me is pretty strong. So just watching. But on my Euro Swiss positions, there's my break even. If I get back into this clustered resistance around 9,600, I'd be okay taking some profit there and then just reloading positions. So if I can get, based on this break even, if I get price up to 96, I'll probably take some profit and then look to add back in at some fib levels, like use this low to high, try to add back in and scale in, and then look for a swing, either a 3 to 5 wave swing. So, these like Swiss trades for me will continue to evolve, and I'll just keep, hanging in there. Pound Swiss, looking good. Anybody buy the Pound Swiss? I mentioned if you wanted to start small, right back into this pocket, which is where we're bouncing now, area 1, and then at the lows would be area 2. So you got to trade small to kind of stomach that drawdown, which is about 300 pips, but upside of 1,200, upside of 1,300, even up to, I'd say even, 1.12 to 1.14 would be a pretty good profit target right there. I mean, so you're looking at anywhere between 200 to 400 pips of movement. Pound Swiss, I think we fill this pocket. So not too shabby. New Zealand Swiss continues to look better as well. This one showing some profit and hopefully a lot more to go. If this is going to keep grinding higher, I may take some profit in here. Take the profit and then look for a pullback, box in some fib levels, so a 382, 50, 618, and then look for some type of swing to symmetry. If that's a 3-wave move, bring it on. I'd love to see a great profit target there, and we could still get a 5-wave move out of this. But I'm not trying to take a bunch of unnecessary risk when the most common thing, especially if you're in a downtrend, and you actually eventually catch the low, the easiest trade is a 1, 2, 3. Same thing as if you're at a high. If you're at a high, easiest trade is a 1, 2, 3. If you want to wait for that extra 5th wave, it's like that's sometimes getting greedy. If it's still in an uptrend, usually you don't get a 5-wave, you just get a 3-wave. So if we can just get a 1, 2, 3, I think I'm okay taking some profit. If we get a 5th wave, which off of like crazy historical lows, yeah, a 5th wave is very possible if we're in the bottom. But I don't need to be greedy if I'm in a nice chunk of profit by the time we get that 3rd wave. So I'm still holding these currencies. Dollar Swiss, still hanging in there. So, I mean, pocket-wise, I think dollar Swiss comes back to this level. We might still, slide lower. There might be divergence here. I'll see what happens. We probably have to get on the right-hand side of the trend line. To be fair, resistance here, resistance here. This might take a while to kind of form the bottoming pattern. But if we get on the right-hand side of this trend line, it certainly looks a little bit better to make a recovery. Bigger picture-wise, is it possible that this thing, catches a bottom? We did clear these lows and sweep these lows. So if we are going to form a low here and then get all the way back up towards 92, that would be pretty nice. I did say this year that probably for the dollar Swiss to come back up, we do need to see a correction in gold. Okay. I did close out a trade on CL as well. So crude light futures, we are up. You piece of. I closed out for break even yesterday. That was the trade that I wanted to see go up. I just took a small loss. It was basically fees only. I took a break even, so I think I paid, $10 commission in the futures market, so I lost $10 on the trade. But if anybody is long, this is what I talked about here. If you're long based on that support, I could see this coming right back up here. We've got support around $65. So if you're long, that's a good spot to be long with a tight stop, because upside is pretty favorable. Not bad. All right, let's go dollar index. Dollar index, still not ready to do anything major. I mean, I'm not taking the bait. I'm not going to take the bait to sell the dollar. Okay, I think if the dollar, makes a move in here, we still have a pullback. But I'm trying to think what type of news and catalyst we have. It's like, does the Fed get the dollar to move a ton? Maybe. Would the dollar move a lot if the Fed decides we're not going to cut rates? If they really change up the plan for 2025, I'm still looking to see if the dollar will come back to 101 or 102. If it will grind back. If it grinds back up here, I'm looking for a trend line break, trade some confirmation, stop loss above. If we revisit the lows, target 1, we break and go to fresh lows. There's symmetry. Target 2. Anything lower than that would be trail, and see if we have a big move. The flip side of that is, let's say that we go down to fresh lows. I think that's a trap. If we hit fresh lows and we see divergence, meaning price and momentum don't disagree, I wouldn't be shocked to see it recover from there. So I don't like selling the dollar. I think we've already, for the worst start in almost 30 years and down about 9%, I don't think there's a ton more to the downside, at least without having some type of pause or correction. Okay, so oil there. Let's go gold and silver. Gold having a strong 2-day run. I'm sure every aggressive buyer that's like, we got the 21 period moving average, we got to pull back, I'm buying gold. Yeah, maybe you're happy. I don't know if we're going too much higher than these previous highs. I can see gold consolidating here. And this isn't bad. I mean, consolidation also means that, look, this can stay bid. If we consolidate here, let's say there's lows and there's highs, let's say we consolidate. Well, if the 21 period moves up and the 50 period moves up and the 100 period moves up, I mean, even a consolidation range like so offers up stronger support to buy. I'm not taking this like first dip. You know, I'm still going to stand my ground. It's like, look, I've got a 3-year run on gold that I'm still holding, and I'm happy to hold it. The one thing I was looking at for the end of the year, and I'll actually, I did put this in. It's not filled, but I'll talk through the trade. I put in a pending order on GLD. It's a December 19th. It's right here. Oops, not December. I need to go GLD. So I put in an $8 credit for December 31st, 245 put. And the reason I chose $8 is because right now, if I look at gold, okay, if I look gold about 30 days out, an at the money trade on gold is around $8.20, $8.45. Okay. So this 200 moving average is trading around 2,800. You look at GLD, that 200 moving average is around 257. So it may not get filled. Like realistically, it may not get filled. But if price ends up if it goes sideways, right, I'm not super pumped about buying that low. I know that we could go higher. I know that gold can still rip to the upside and be just like this, monster move, and maybe one of the easier trends in 2025 into a bubble. But obviously, I'm looking for more dynamic support. So if we have a 275 support level, a 255 support level, this is where I'm certainly more interested in buying gold, like adding to my position, buying more shares, and this little consolidation, if that's what we have here, still not that interested. I'd rather just wait. I'm long for the last couple of years. If we just break and go higher, I'd rather just let the consolidation break and go higher and continue to run with the gains that I already have. If I want to add to it, I'm going to be picky. I'm going to be picky on where I enter. So anyway, this trade's still running. So GLD is here. So I still have a bull put spread. There. And it's up about, realistically, it's up 90.5%. I don't really have to do anything else on the trade. It's like, just get out of it. I should just get out of it. I'm saving 255 days of time. I'm getting 90.5% of the profit. Capital efficiency wise, I'm almost better off just taking the profit than just keeping the shares that I have. That's up, $3,000 on 10 accounts. So let's see. This is going to close out for like 20 cents. I'm going to try to let this go to like 94%, 95%. I'm going to try to turn this into a $200 trade. And also I wouldn't mind getting more shares of GLD if it came back to 245. So I don't have to do anything. I certainly don't plan on waiting 255 days for this thing to close out for profit. It's already up 91%, which is good. But let's see. So the trade I was crafting yesterday was, because an at the money move out 30 days is about an $8 credit, I'm trying to put in like a 260 or 250 put, like a cash secured put that I'm willing to own some GLD, and try to put it around an at the money price. So an at the money price is around $8. If we have an increase in volatility, it should also swell that premium. So if I could get filled at $8 at 245, my break even would be 238. And I would own gold at a discount of around 25% off of recent highs. So, wishful thinking for right now, but maybe the patience would play out if we don't go any higher and we in fact do make a correction. And look, an orderly correction on gold would be perfect for longer term position to come back in and buy gold. I just wonder if the concern is that we just keep going up, 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 up. It makes everyone chase price, and eventually there's going to be a crash in gold that, I don't want to be a part of the crash as far as like, I don't want to lose profit on the trade. So if we get a bubble type move, like I'm going to be moving stop losses pretty aggressively, and eventually it turns. So that's why I measured the like the 30% stretch away move on XAU up here. So if we stretch away from this EMA, that's around a 30+% stretch away move. So if we have that capitulation, right? So somewhere between, I'd say around 3650 to 3800, maybe looking at some profit protection if it just keeps going up. Okay, I still like silver and it's performing well. Silver might set up for a slightly better trade. Let me look at like a 26 put right now in silver. So let's go SLV. The SLV level is a little bit lower. So this would be previous support around $24. Let me look at like a $24 put. So trade on SLV. If I go out to the end of the year, what's a $24 put? I don't think the premiums were that great. Nope, they are definitely not. So 40 cents. But it's not super expensive. How many shares would I want to own? Maybe another 300 shares, maybe another 500 shares. So, I mean, it's an income trade. If I did a 5 contract trade, I'd make $200. That's income. I'd be willing to own it, flip it. But that is boring. And no, I'm not going to take the trade for 40 cents. Right now, like an at the money is trading for, $2 and change. So is it possible that this trade offers up $2 and that would be another 10 grand of that'd be another 10 grand allocation. So if I did 5 contracts at $24, $24 assignment, $2 times, let's go 500 shares. So if I did an $11,000 allocation, I mean, that wouldn't be awful. I don't know if that's going to get filled though. That could be wishful thinking. I'm going to put this in though. So $24 pending credit at $2 out to the end of the year. That would be any type of pullback we'd see on silver. I would own some more shares, so I'm willing to own another 500 shares. So $2 credit. Let's throw this one in. Let's go in for buying power, $411. It's fine, plenty of buying power there. Does this account, do I want to take on, if it was 22? All right, so I type about $5,500 in buying power. It's not awful. Okay, I'll put this trade in. All right, so $2 credit, and I'm going to do this for every account. Okay. 2. There we go. That's an IRA account. That's a little much for the IRA account. I'll probably hold off on that one. I'll do a 1608. This one reduced by $400. 336. Okay. And this top margin account. All right, so adding those in. So that is a pending order. 12/31. 12/31 expiration. Sell. 24 put. $2 credit. Pending. All right. So not filled. It may not get filled. But if we have any type of correction in gold and silver, I'll be looking to see what the premium looks like on those trades to get levels that I'm interested in. Overall, I'm still pretty bullish on silver. Measured moves all the way up here towards $44 on SLV. Measured moves on silver, XAG, up to $41 and $48. Gold, I mean, we're already at all-time highs. We're having a 2-day move that's pushing us back up towards those highs again. I think there is still consolidation, so high, low consolidation would still offer up some support to buy from. I just get, that's not a great level. I would say that's like, okay, that's a near-term support level if you want to buy area 1, but I would want to have dry powder for an area 2 if it pulls back a little bit deeper. But I still like gold. I mean, global uncertainty is certainly fueling gold. Central banks are buying it like crazy. And the hard part is you're just measuring all-time highs, and it's hard to project like where it goes. But when it's kind of in this this rare stratosphere of like everything's up and gold is up and it can't be stopped, then you never know how high it's going to run. Okay, Bitcoin still hanging in there about 94.2 right now. If we pull back, I'm still looking for a pullback into this like 50% zone. If we get a pullback and then a swing, if it keeps melting up, that's fine. I would expect this to be a range trade perhaps. If I'm wrong on that and it just keeps melting up and then it consolidates, I mean, who the heck knows? Maybe it just consolidates and then breaks out. And this is all part of a bigger push and a bigger swing. 125 to 145 are some projected targets in Bitcoin. So if we do clear the 109 highs, I think we can go to 125 to 145. Okay, MicroStrategy still hanging in there. Earnings were terrible, but it doesn't really matter because it just trades according to Bitcoin. Coinbase still hanging out around 196. I mean, I kind of want to look at another 111 here. Let me see if I don't think the premium is going to be high enough to take this trade, but we were down to 142. Let me see what this would look like here. So 140. We go to Coinbase for a second. Coinbase's earnings May 8th. All right. That's this week. Yeah, that's Thursday. All right, let me price something out here. Let's go coin. Average move on Coinbase is around 9%. So we're at a 196.10 times 09. So about a $17.6 move. If I go into, so this week's plus or minus is $14. I'm looking for about a 1760 move. Go out to next week to be on the safe side, about an 1840 move. So I'd say between $16 and $18 a movement on Coinbase is pretty fair. How often does it at least hit a 9% move? Let's find out. So if I went within about 8 days, how often do we hit 9%? Well, we hit it there. We hit it there. We don't hit it there. 8 days later, we hit it there. Close, but not quite. Not quite. 8 days later, we hit. This one hits right away. This one does not. This one does not. Actually, I take that back. This one was 8.91. Just shy of 9%. Not enough. Did not, and then finally did day 8. I wonder what the 1-day move. Let me price something out here. Coinbase earnings on Thursday. I don't know if this is a smart one to play now or after the Fed. So this is after market Thursday. I think the Fed might also kind of disrupt some price action here. So let me see. I'm just going to price this one out. So if I look at a May 9th expiration, if I were to sell a 945 and a not 197 or a 192.50 and a 197, let's build this trade out. Let me go. I'm going to build out this trade. So this would be, where's my dead zone? So I think it's an iron butterfly. Coin. All right, let me build this guy out. So if I were to sell the 192.50, I guess I got to construct this with a 195 and then go out about $15, maybe 15 to 20 bucks, and we'll take the risk. So let's do 195 on both. So I get about $15 here. Expect to move is $14 by Friday. Let's look at a 20 wide. So that'd be a 210 call or 215 call and a 175 put. IV rank, apply volatility. All right. Friday, May 9th. This is only, the heck, man. So I get about $15. Got to put the spread on here. So 195 to 215 and 195 to 175. So I get 1249. Expect to move is maybe 14. It's a bit more risk than I really want. The plan for this trade would be it comes out after market on Thursday. Friday is the only day to manage the trade. We'd have to have a move 1248. We'd have to have a move 1248 divided by 196. So we'd have to have a 6.3% move day one. And that's kind of the risk that I'm taking here is how many times in one day do we get at least a 6% move? Well, it did it there. It did it there. No, no, it did it there. No, no, it did it there. No, no. I mean, you can see that I don't have like a super high probability winner. It was over, under. It's kind of a toss up. So 1, 2, 3, 4, 5, 6, 7 times it was over. So we've got 7 times it was over the percent move. And then 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 times it was under. So I have a tiny little probability that I would get it right if it was under the expected move for the day. But it is literally like an all or nothing. Either I'm right or I'm wrong, and that risk is $751. I don't know. I think I'm just going to pass. If it was, 12 to 13 times yes and 3 to 4 times no, big difference. I would take the probability that way. Yeah, it's kind of a bit of a crapshoot on how it moves. So I'm going to pass on this one. Plus, we have Wednesday's FOMC. Maybe this gets prices moving a little bit. I don't know. So, but I was looking at an earnings play, income play. Would I want to have some shares of Coinbase? Let's check one more thing fundamentally, and I'll get some more currencies here in a minute. Any requests, type them in the chat for me. I'll start taking requests and go another like 10, 15 minutes. Coinbase. Earnings forecast to decline, earnings grow like crazy. That's kind of false number. I mean, that's like ridiculous, but it's probably going to change. Price to earnings ratio is below the capital markets industry. Okay. Price to earnings, not terribly expensive. But that's a big turnoff on why I would say I don't want to get super aggressive. Outside of if I owned it, I'd own it way cheaper. So, all right. I think what I'm going to do is if Coinbase, these are all profitable. That was profit. I can get rid of these trades now. If there's a floor, if Coinbase comes back down to the lows, I mean, obviously this could be support, and we could still work our way back up into, 260, 270, 280. I would prefer, if possible, that price comes back down into support, and I can start looking at some income trades in the low the low 100s, like a 110, 100, maybe a ratio spread, and hopefully, takes a profit based on, this support level holding. So if I get a chance to put in a couple more ratio spreads, it'd be we revisit the 150 handle, 140 handle, and I'll go out of the money for a ratio spread, try to get some, $2-3 income. So anyway, all right. Anything on copper? I see pound CAD came in. All right, we'll talk about that. Copper, just kind of a big messy position. So high, low. I could see copper just being a wedge for right now. I'm not getting directional. I would be interested in copper with a low risk, high reward setup. I'm not that interested in saying that copper is going to automatically go up. I don't think until we have trade war resolution that copper is going to get super excited. There's too much kind of reliance on China, I think, for copper's upside. And in order to get like a real clear picture of China, I think we have to have the U.S. and China relations resolve. At least look better for this whole trade war situation. Japanese yen, okay. FXY, still holding shares of that. EWJ up to some fresh highs. That's good. I mean, I am curious. I guess I'll do a measured move here. Maybe this is just a big range. From this resistance to this support, maybe this is just a big range trade and it comes back down. But if we are going to break here, this low, this high, if we break this high, is it possible that we double that move? That would probably be a profit target for me for the shares that I have. So if we go from low to high, and we go above or even up here, I would project a target around $82. So is it possible that we have a push into some new space, clearing some recent all-time highs and running into the 80s with the Nikkei performing pretty well? Maybe. I'm going to hold my EWJ to see. That's also a kind of a non-US play, diversified. DAX just shy of the highs. Still, don't be surprised, man. This thing might be off and running. It's been like a hated ETF. The Eurozone's been like a lot of argued uninvestable. I mean, what's crazy is like these are areas that like nobody wanted to invest. Nobody wanted to invest in China. Nobody wanted to invest in Europe. And here they are, like some of the best performing ETFs of 2025. It's not something I want to chase. There's a lot of volatility attached to them. I think if you do see some outperformance that's non-US, that's great. It's encouraging, but it's not something I want to chase when it's already up 20+% for the year. Dips and pullbacks, sure. We have this V bottom and this thing runs to the top and we have some consolidation. Well, sure. Yeah, you can still buy that with a trade. But if I miss my opportunity here and we're back up to the highs, I don't just buy this thing at highs. I want to see it, if it's going to clear the highs, then pull back and retest the highs. Well, that's an easy trade. I can at least create some type of, technical trade. FTSE, it's kind of the same thing. If we come back up to highs on the FTSE, or we pull back a little bit here, like looking for this to get back to highs, there could be still a trade in the FTSE. I'm going to hold off in Argentina. China. Oh, what's up, China? Doing all right. EWZ back to the 200. ILF hovering above the 200. Mag 7. I'd like to see some. I mean, if there's resistance here, it'll be interesting to see if Mag 7 fades a little bit lower. Do we get some gap fills? Do we make a higher low? That's what this trend line is right here. If I stretch this out, so this trend line support. If Mag 7 comes back down to trend line support, we could still kind of grind our way through this. Is this going to break and go to highs? Is this going to be something that revisits lows? Obviously, if Mags is back down to lows again, I'm still interested in having some exposure. Apple, 198. That earnings trade was profitable. Amazon is still in the middle. I've got an expiration out on Friday. If I don't know if FOMC is going to bring any pain or not, but if it does, it wouldn't be terrible to see Amazon, at least hit the bottom side expected move. Broadcom is now back above the 200-day. Google is back up towards the post earnings rip. So that's kind of encouraging. I just have some dollar cost average positions in Google. Meta, we're back above the 200 moving average. I just did some ratio spreads here on Meta. That's about it, just some income. If I want to own Meta, it would be down here. That's where I want to own it. Otherwise, it was just option trade, some income. I'm not ready to say that, Meta, it's like if it comes up here and then pulls back, perhaps this is a bullish head and shoulders, right? We get back to highs, but there's the trade. I want to see that setup. Oops. There we go. Okay. Microsoft. Post earnings, Microsoft is ripping. All the allocations I did here and at the 370 level are looking pretty good. Maybe I'm just going to hang on to Microsoft to see if we get back to resistance. We could obviously have a gap fill. There's a big gap post earnings, but I would say if it just hangs out here and it's a little island, we run back up to highs. That may be a good profit taking spot. As far as like near term safety, I mean that's a huge run from 360 to 460. That's a pretty impressive run, right? We'd be up 35% back to highs. So I don't mind dips on Microsoft, but dips are going to have to be pretty meaningful. We'd have to come back to like $400. I honestly, income trade. I might just do the same thing again. So without having to own a bunch of shares of it outside of like some, dollar allocations. Netflix still not calling the top on this one. Nvidia, the little semiconductor stock that nobody cares about anymore. We'll see if it can get back to, the 200 moving average is hanging out around 120. So if we can clear the 200 moving average, there's a lot of chop right in this zone. There's, you can see structure resistance and support right around 130. So I'd say in the near term, if you are long on Nvidia from these, bottoms, a 125 to 130 price target, I think would be a pretty safe spot to be taking some profit. S&P, we talked about that earlier. I just think it's going to be nothing until we have FOMC tomorrow to maybe break open some volatility. It's going to be pretty quiet these next couple days. Like today, so far, pretty quiet. I'm looking at levels that are just right in between. So 570 to 570 to 550 on the SPY, 5,700 to 5,500 on the SPX. So I've got a little level that's popping up here around 57.25. I don't think we're going to get there today, but just noting that these are typically like weekly levels that I'm watching. So all my bearish sides have kind of evaporated for the day. It's mostly, well, I guess we could have more of a melt up. But this is all subject to change, and I would say FOMC is going to be more important to watch tomorrow. Okay. Tesla, I talked about that one earlier. Berkshire, fine. Bonds, I guess a little bit off the lows, not super exciting. 2-year yield, 10-year yield, still sticky, still above Liberation Day levels. This is where the Trump administration is saying lower the rates. They're kind of strong arming the Fed, but I don't think the Fed's going to budge. This is why I don't think the Fed cuts rates and watches the market see yields go down. If the Fed cuts rates in July, I don't know if this goes down. I think if anything, if we're going to track foreign debt, we probably are going to see the yields. Maybe they don't go up, right? Maybe they don't go up here to 5%. Maybe don't break the market. But I think they're going to be sticky. I think this like big shakeout we had in the bond market, we're probably going to see some sticky yields around this like 10 and 20 year. So, if we have yields up here, then you're going to entice a lot more like low risk in the markets. If you can go, 12-month money market instrument, 12-month CD, and you can get 4.5% to 5% with what is supposed to be little to no risk, I don't know why a lot of people are going to participate in the high volatility of the equities market if you can get high yields with virtually no risk. And I say virtually because it's still based on the U.S. and it's still based on U.S. government, and that's not necessarily debt that I'd want to have long term. For 12 months, sure, but not long term. The 3-month yield hanging around 4.3. I watch this from the 1 month and 3 months so I can see if I'm putting money into BIL. That's for unallocated cash. It's treated like a treasury. What else? Let's get into some currencies. Let's check China really quickly. So HSI is up. QQQ is up. This is CQQQ. Alibaba is up. My Alibaba exposure is still Alibaba here. That's it. Well, I mean, it's up $600. Let's see. Well, I'll take a look at this. If Alibaba heads up to these recent highs, then I'm probably going to look at taking some profit. But I think we can get a, run to 150, 160 would be a good profit target for me on Alibaba. I mean, the crazy part is it's probably not going to be without volatility, but this could be a stock that runs like ridiculous. I mean, is it possible this is a $250 stock at some point? Maybe. So would I like to hang on to it? Yeah, I would. So I'm probably going to hang on to some Alibaba. Baidu, I have shares of Baidu. This one's down, but I like the technical side of Baidu. Baidu it hasn't ran yet. I mean, if Baidu is going to be a runner, we break the structure. This is a falling wedge. We kind of hold and consolidate in the zone. If this gets clearance and confirmation, I think we've got a 100 to 157 or 100 to 160. That's a lot of direction. I mean, a 60+% move. I'm going to take a stab at it. FXI, this is large cap. I still have some exposure here as well. FXI has some shares up around $600. KWeb, I'm out of. MCHI, JD, I'm still in. JD earnings next week, looks like May 13th. These are out to May. I think that's all I have for May. May 16th. Yep. So $40 calls. Right now, calls are up about 95%. We have earnings that week. So if we get a big pop to $40, perhaps it gets called away. I have 1,500 shares covered. I've got some naked puts out there as well that are up about 56%. But these are much lower prices. So like 27.5 and 3, 27.5 and 3. I'm going to see if price goes up, like we get, let's say JD's at $38, $39, $40 post earnings. This naked put combo is probably going to look like a 75, 80+% max credit, and I'll look to take some profit. So I'll keep an eye on that one. Schwab dividend, Schwab growth, non-US. Let's go SEHY. If I can type. Look at this bad boy. We're up to some fresh highs on SEHY. Now up about $1,800. So I bought some shares. It's not super aggressive price action, but as a diversifier, if we're going to see the U.S. underperform the world, this is one pretty easy way to trade it. So I did anywhere between like a $2,500 to $5,000 allocation, and we'll see if we can get a little world performance. So this is mostly Europe and China. SEHY. It's a Schwab ETF. But I mean, so far so good. Okay, and I mean, to be fair, it's like I had to nurse about a $2 drawdown. So I mean, we're right back up to high. I mean, I'm excited we're back up to highs again, and if there's more to go, I mean, who knows? This is the previous all-time high, I think, on this instrument. So if the U.S. is going to underperform, the world's going to outperform. I don't want to cap my gains on this. I think this is a good way to have a diversifier and have some exposure, non-U.S. Okay, what else? Let's get into some currencies here. Aussie CAD. I'm still long Aussie CAD. Oops. Yeah, I'm still long. If this is a bottom, let's say we come up to this resistance level, this could be a good structure trade. We could still get a pullback. I don't mind getting another chunk of mini lots, micro lots in this pullback zone. So if Aussie CAD can push up a little bit higher, that would be my kind of signal top, and we pull back into some support. I want to take that swing. I'm still looking for a price target around 94. We did some of the Swiss pairs earlier. I'm just going to ride these out a little bit longer. If it is a wave 1, wave 2, wave 3 to symmetry, I'm taking profit. Aussie yen. If you bought the August 5th bottom, just manage it. Aussie New Zealand, I'm still going to hold. I'm going to dollar cost average in at 106, 103, and 101. Aussie dollar, it's in open space, but like I said, I'm not going to buy this. It's in open space. I get it. I'd rather see a pullback. If we pull back again below the 200 and then back above it, I like that trade. I want to see a dip. Currency-wise, I don't buy highs. I don't sell lows in currencies. I wait for pullbacks. CAD Swiss, actively looking for a bottom. If we come back to this level, this could kind of work its way up into this support. Pull back, dollar cost average in, get another swing. Wave 1, 2, 3. Yeah, I mean, I might take profit here on 62, but I'm trying to get back to this cluster on 64. CAD yen, pullback on CAD yen. Could be some support though. Watch the support level. Watch that support around 102. Swiss yen, no trade. Euro Aussie still sliding lower. I didn't get the pullback I wanted. Euro CAD, I talked about this being short. If you're short here or short at equal highs, area 1, area 2, I still like this pushing back down to 5,400. Especially if oil is bouncing hard at that equal low, we could probably see Euro CAD slide down to about 5,400. Euro Swiss, looking for this low at 92.25 to hold, trying to get back into 96. Euro pound, no trade. Euro yen, no trade. Euro New Zealand, still sliding lower, not offering the pullback that I wanted. It's likely sliding back into like 86 or 8,500. Euro dollar, it's quite sticky. I still think this resistance level will hold. So if you're selling Euro dollar, area 1, area 2, stop loss above by about 1 ATR. And if we end up heading down, it's just a simple swing. Here's a 23, 30, 38%. Those are just retracements. If we fall into those levels, I take some profit. And then I start looking at position for, is it possible to then see this area offering some bounces? If the dollar is going to get weaker, euro dollar long would be the way to expose that. Pound Aussie, no trade. Pound CAD, don't really love the pound CAD unless I was able to get a sell trade at the highs. So this area, maybe a sell trade at the highs. Stop loss about 1 ATR higher. So equal highs, maybe a sell trade in here. But I would just target the previous range lows. There's a lot of support resistance in this area around 8,100. So that's about it. Maybe an 86 to 8,700 sell trade down to about 82, 81 profit target. Not bad, 400 to 500 pips. Pound Swiss, I like this one long up into the the 112.50 to 113.50 window. Pound yen, no trade. Pound New Zealand, possibly a bounce. Not now, but like if we come back to the 200 moving average, look for this to be a short-term buy opportunity. That's it. I mean, look at it on a smaller time frame. Pound dollar hasn't really turned yet. Clearly a lot of indecision at the tops. Not calling the top yet. If we break the lows, yeah, we could sell off. But I think euro dollar is a better trade. I've said that for the last couple of weeks. I think euro dollar is cleaner. New Zealand CAD, I still like this trade. Maybe I'm long in this pair. Maybe this consolidates a little bit longer, but if we have some type of bullish pattern, I'm still looking for a pushback up into previous highs. So I like New Zealand CAD long and willing to kind of ride this one out. New Zealand Swiss, same thing. I'm currently bullish in profit, trying to get back into this would be kind of wave 1 at these highs, pull back wave 3, and so starting to take some profit. Initially, I've got profit targets way up here. I don't know if I'm going to hang on to it that long unless I'm willing to ride out like a 5 wave, which maybe I can, but I think being up in a 3rd wave is still very profitable. Okay. New Zealand yen, that'd be the August 5th bottom. New Zealand dollar, trading in some open space. I'm going to look for a little bit more consolidation here. If we get it, not a bad spot, right? I mean, it's still like we could pull back here towards 58.50. We could pull back, off of this swing. We could pull back much deeper, like a 50618 zone as well. I still like this trade to the upside. I just want pullbacks. I want some pullbacks. Dollar CAD slowly sliding lower. I'm staying out of dollar CAD. Dollar Swiss, probably have to wait long enough. I mean, we're oversold with some divergence. Last time we had levels like that, this was a low, this was a low. So I'm looking for a low to form. But this might be a little messy low, and eventually, we get on the right-hand side of the trend line and probably work our way back into, maybe 92. But this is, to me, dollar Swiss, I'm telling you, like Swiss pairs are probably going to be gold related. So if gold ends up correcting, the Swiss will likely weaken. If gold stays firm, then the Swiss is going to stay pretty stubborn too, without some, we'd have to have some Swiss National Bank activity / intervention, which I don't think they have any interest in doing that right now. Okay, and the dollar yen coming back down to lows. Maybe not a bad, if you're watching dollar yen, watch this level here. Okay, daily chart compared to a smaller time frame. If we see the smaller time frame turn back into a buy opportunity, I still think you have a decent reward to risk trade on dollar yen to the upside. It would be based on this support holding. If this support doesn't hold, then obviously don't hold a long position. The key here is if we get some confirmation on a smaller time frame, turns bullish, I like the trade. Stop loss, below the U-turn, and then see if this wants to head back up into like a 148, 149 pullback zone. So that's it. All right. Coming up earnings wise today, and then we have FOMC tomorrow. Let's go stock twits. So do we have some notables today? Notable earnings today. Some of the big ones: AMD for semiconductors, Lucid for EV. That's kind of it. I mean, that's after bell today. So AMD is probably the big one. I took some profit on this one earlier, or I have a ratio spread. Let me double check. AMD is here. Yeah, the 65 by 60, that's a ratio spread. So it's already up 77% of max profit. I don't mind also owning shares of AMD. This one would be AMD. Snowflake looks pretty good. Price to earnings, not cheap, but undervalued, and I'd be looking to own the shares at like $60. So I think the probability of my trade is pretty high compared to its peers. It's an interesting mix of peers. Like I wouldn't compare this to Texas Instruments necessarily, but whatever. So this is one of the companies that would also be benefiting from AI build outs and infrastructure, data centers, chips, computing power, the future. So anyway, we'll see. But there's my trade. I mean, we're way down here. So earnings, unlikely to have some crazy, ridiculous move. I would imagine also we have the ability to run back into the 200 moving average. And if that is the case, let's say AMD comes in with positive earnings. If it's positive, this trade's probably trading for like 90+% profit. So I'll probably just take the profit off and move on. Okay. All right. That'll do it for today. Thanks, everybody. See you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the EdgeFinder 40% off, our best discount of the year. Check out the links in the description below to visit the EdgeFinder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.